On today's Hashi, I'm discussing a near record level of sellers offering concessions, key takeaways from a real estate investor survey, and mortgage application data for the last 7. Today is BAM Fest Day on this Wednesday, April 23, 2025. I am Byron Lazine, and the Hashi starts now. Live from Naples, Florida, it's BAM Fest Day. I got to tell you, we were doing the run of show yesterday with the BAM team and just kind of dialing it all in. Let me know in the chat. Obviously, let me know which market you're tuning in from, wherever you may be. But also let me know if you've been to a virtual event, one of our 4 staple events that we do here at BAM. Last year it was BAM Pro Bowl, then BAM Fest this time of year, then BAM Barbecue, then the BAMmies at the end of the year. We had Pro Bowl earlier in the year, and now we're back to BAM Fest. The big virtual events, not the webinars, which are great as well. But let me know if you've attended a BAM virtual event or if today's BAM Fest is going to be your first one. All right. I'd love to know if today's virtual event will be your first BAM virtual events. Phoebe was at all of the virtual events. Thank you, Phoebe. So we were doing the run of show yesterday for BAM Fest, and I'm just going through it with Steve's first one. Thank Steve. Shout out to Steve. Good to see you. And we're going through it, and I'm like, this is going to be our best virtual event. I mean, it's the level of aptitude from the guest speaker. I mean, the guest speaker's unbelievable. I cannot wait for that, but it's everything. It's all the little things that go into it, the in-between entertainment. We've got a really special one planned here. And if you're not signed up yet, we are doing a replay for this one. We didn't do that for Pro Bowl. The only way to get it is to be either a BAMX member, it'll be in BAMX, or to sign up. So now bamfest.com is how you sign up. It's 12 Eastern today. Sorry about that. It's 12 Eastern today. It's 9 o'clock on the Pacific Coast. So just, less than 3 hours from now is going to be BAM Fest. Now, bamfest.com. Make sure that I got to make sure that my screen will work. If anything here, there you go. Make sure that you RSVP right here. Now, bamfest.com if you haven't done that. Totally free event. Okay. What's not free is when a seller gives up concessions. Okay, that costs money. They're doing it for a reason, though. A seller gives up concession to a buyer to get a deal done. Okay, so it's like, oh, I'm giving something up. Well, you didn't have it to give it up in the first place because you're doing this to make the deal work. It's part of the negotiation. It's part of, obviously, making the deal make sense for both sides so that you can move forward. It's kind of like a tariff negotiation. Hey, I don't like this. You like that. I don't like this number. You like this number. Right? There's a negotiation that's close to being done in India, maybe putting pressure now. We're hearing that the Treasury Secretary is saying, we might have a U.S.-China deal. This in the very near future. You're seeing the market react to it today. Dow's up 800 points after the stance on China, after the stance on Jerome Powell keeping his job, which we knew he was going to keep his job. Trump can't fire Jerome Powell, so not sure why that's even news. I think it's more of this, hey, India doing a deal. Maybe China's going to do a deal. Hey, let's go. Let's go. Let's see it if it happens. And obviously the markets are reacting. We're going to get into the 10-year a little bit later, but concessions to a buyer is kind of just that, like, hey, I don't like this initial part, or this came up in the report, and I've got to be here to make this all work. Sellers really never had that. They've got to throw something in to make the deal work at the end. And right now, 44%, according to Redfin, of home sellers are giving concessions to buyers. This is now just shy of the highest level on record. So near record high levels. And so, I mean, if you're in one of those markets, Southwest Florida, you're in one of those Texas markets, you're in the Sun Belt states where inventory, it's competitive on the seller side. There's more sellers than there are buyers in those markets, right? If you're in one of those markets, let them know, hey, we're at near or at record level of sellers making deals work. So if you don't want to make this deal work, the buyer's just going to go next door. They're just going to go find the other seller who actually wants to sell, who wants to make a deal work. More sellers are offering concessions right now as rising housing costs and economic uncertainty make buyers nervous. Also, just like, hey, if you got more, it's just simple supply and demand. If there's more competition on the sell side, then there's going to be more sellers willing to make a deal, to do some kind of a deal. And if there's more sellers willing to do a deal, those buyers are going to find those sellers that want a bargain. That, oh, but my house is special. Really? It's the same floor plan as the other 12 in your community that are on the market. How special can it be? Oh, the tile you picked out is from Italy. Wow. It's pretty ugly. Okay. So that's a problem. Okay. Maybe it's cute in Italy, not cute here. Okay. So you got to figure it out. Housing supply is hitting a 5-year. We know we're still under nationally pre-pandemic levels. There's a lot of, areas where housing supply might be above, Sun Belt states, some of these areas, certain particular areas might be above pre-pandemic, nationally below pre-pandemic levels, but a 5-year high on inventory for sure. At a time when we've seen the 3-year elevated rate, it's just inching buyers closer and closer to the sidelines. The more we take a look at it. So here, let's take a look at this. These are the numbers historically going back about 6+ years on home sellers giving concessions to buyers. 2 and 5, 2+ out of 5 home sellers are giving concessions to buyers right now. We're at the peak levels here. Last year was only 39.3%. So now what's interesting is, this is based on, by the way, Redfin buyer agents. Okay. Across the country. If you're just wondering where this data is coming from, just, it's a data point. I'd be curious how you think about this in your market. But they're including money toward repairs, closing costs, mortgage rate buy down. They don't specifically say, buyer comp. And, I expect this number to be, if you were to truly factor in buyer comp being negotiated in this deal, I think this number goes higher. I think we're going to be living in all-time highs, kind of just moving forward. I think we're going to set a new kind of way to look at this. So they don't really say whether it's inclusive in closing costs. I think if you had a true look at this, and maybe Redfin agents aren't asking for buyer agent comp to be included in the deal. We know that's happening across the country. And we know sellers are certainly negotiating in that fashion right now. This number would seem higher to me. Just one thing that kind of stuck out to me looking at this. But there's no question, we saw it with builders a year ago, and now we're seeing it with existing home sales, where certain pockets where the market's just not, moving quite as fast, or home tour traffic is down, or inventory is up. You're seeing seller concessions, and you're seeing it now on existing home sales. We've seen it up on the on the builders. The builders have pressure. Yesterday, we looked at these national home builder stocks. They're getting crushed compared to the S&P. They were way up compared to the S&P before Trump inauguration day. Since Trump inauguration day, they're down, and they're down big. Uncertainty in the economy, uncertainty in tariffs, all of that happening. Here is where sellers are increasingly giving concessions to buyers. Interestingly, it's Seattle, it's Portland, top of the list. If you blindfolded me and asked me what's top of the list, I would have said, Austin, Southwest Florida. I would have said those states, but Seattle, Portland becoming not a huge desire. Listen, Portland, I like Portland, but they've had some migration issues. I've got friends that have, lifelong Portland people that have said, you know what, I'm kind of done with Portland right now. So Portland, if you want to sell, they're giving concessions. Seattle, Atlanta, San Diego, Denver, LA. LA is surprising. Inventory is not that high. San Antonio, you got high inventory there. Phoenix, Sacramento, Las Vegas, Riverside, Dallas, Miami, Houston, Austin there on the list. So Austin kind of in line with what's going on nationally. A little bit of a surprise. Who's at the bottom of the list? It's Northeast, it's New York, it's Boston. It's where inventory is incredibly low. Now, some sellers are just going to decide, I'm going to lower the price. I'm going to get off my aspirational perch here on price, and I'll do it there. And then some are not only lowering their price, but they're lowering their price in addition to offering concessions. So they went out to the market. This is good information for sellers, like of why you don't go out to the market on the wrong price, because then you end up not only negotiating price, you end up throwing in some goodies, right? Like when I get, and I talk about this now with compensation. It's like, I want to have compensation levels that I can talk about. But I don't want to be that agent that just comes in and just has one compensation offer and then just cuts it every single time the minute somebody says, oh, so-and-so, hey, I've got 3 levels. Let's personalize which one works best for you. And if I've got to throw in something from one of my other levels to make the deal work, I can do that. Just think level 3, 2, and 1 on comp levels. And they want level 1 because it's the comp level that they want to pay. If I got to throw in some of the perks on level 2 to make the deal work and not have to really negotiate down on my 3 levels of numbers that I want, let me do that. It's like when I buy electrolytes online to put into my water. Okay. And when I don't do the subscription, because I just wait for them to say, oh, if you buy today, we're going to throw in an extra one. We're going to throw in one of these, a bag of this, whatever. Okay. Oh, good. I'm getting a little bit of an extra, a bonus. And you could do the same thing with your comp levels, but a seller doesn't want to have to give in the bonus of like, oh, I've already come down on my price 10%, and you can keep my 3rd child. Maybe some sellers would want to do that, but they're not looking to do that in a negotiation, not looking to throw in all their pottery burn furniture that they were planning to bring to the other house just to get the deal work and then have to go buy new furniture at a higher price. So, they're not looking to pay more commonly for the rate buy down on top of lower. It's just costing money. Sellers need to come out at the right price at the right time. And probably, by the way, with all the conversation, I just did a real word pod on this. They probably need to come out to the open market. I just got sent, I don't want to go down too many rabbit holes, but I just got sent this LinkedIn post. I'll see if I can bring it up. About a seller who didn't go to the open market, almost cost themselves $100,000. I'm not taking a side there. I'm just telling you, sellers that come out to the market that want to make the most money and have the most buyers possible and come out at the right price, more importantly, don't have to do things like this. But there are some sellers across the country right now giving concessions and cutting prices, concession and sold below the list price. That's 21.5%. That's 1 out of 5 sellers doing both. We're seeing it more elevated number on the builder side, of course. Concessions and a price drop, 16.2%. Concession, price drop, and sold below list price. That's another 10%. So that's what you're seeing. And again, these are only Redfin agents. Your numbers are probably better. Maybe there's Redfin agents that are better than the survey. I'm just saying, like, this is one sample. It's data points potentially to use when you're having these conversations with a seller who won't get off of a certain thought. 13%. Listen, sellers get thoughts from a lot of people. Remember, mainstream media headlines. Talking to an agent yesterday, a seller has this thought against taking any Hubbard because a cousin who lives in a different state told them Hubbards are bad. This is up in the Northeast where, $350,000 properties sell in about 35 seconds. And so sellers get ideas stuck in their head from a lot of different places. What breaks through ideas, not ChatGPT talk, regurgitating it. It's actually showing them the data. It's why we put all of these charts inside of BAMX for you. So you can just grab them right after the hot sheet. If you want to use any of these on a conversation that you're having, to show people, to prove it to them, what's going on in the market. Pending U.S. home sales that are falling out of contract right now. They're an elevated, not a ridiculous number, not 2020, obviously 16.4%, but an elevated number of what we would consider normal. Look at 17, 18, 19, 11%. Now we're up over 13%. We're at 13.5% right now. Pending home sales falling through. They've been falling through, you know, this is just March, that number there. But they've been falling through at this level since the rates went up. There's more uncertainty. It's harder to put a deal together. Okay. It's harder to find the right buyer that can commit. And if one little thing changes, maybe their mortgage doesn't go through. So there's a lot of variables right now that sellers got to consider. This is all market dependent, of course. Here are some of those markets to consider. Share of home sales with a concession. Atlanta, in quarter one, Atlanta saw 61% had a concession. That's a year-over-year pop of 5 points. Austin, 45%. So a lot happening there. But if you look at Boston, it's only 18%. That's an increase of 6%, but there's a lot less inventory than those other previous two markets. Miami, a third of the homes are seeing a concession. New York, only 5.5%. Look at New York City. 5.5% of homes are doing a concession. The market's crazy. We did an article on nowbam.com. Josh Rubin, friend of mine, posted this video about a line for a rental. It was around the corner. It was absurd. It was crazy. This is a drop of 15 points for New York on concessions. Sellers don't have to give concessions. There's less sellers than there are buyers. No concessions. When you're in a market like San Antonio, guess what? 44%. It's a drop of 10 points. Last year, inventory was more out of whack than it is right now. Tampa, Florida, last year, right after the hurricane, more people were giving concessions. It's dropped 9 points. It's only a third in Tampa. I actually would have thought that number would be higher. Nationally, it's 44%. So Tampa, you're under national numbers. Okay. Here's an interesting one: home purchase cancellations geographically. All right, pending home sales that fell out of contract. Atlanta, where they have the most concessions, it's a high number. It's 17% are falling out of favor. Okay, out of Fort Lauderdale, 17.5%. Fort Worth, Texas, 18.4%. These are all above the national average. Vegas, 18% of the time falling out of contract. Miami, 18% falling out of contract. Nashville, kind of in line with what's going on nationally, 13.6. Orlando, Florida, 18.7, much higher than the national number. San Antonio, 18.1%. Tampa, 17%. National number, again, is 13%. What was New York? New York's only 7.7%. A lot of competition not falling off of deals. All right, let's look at investors. How are investors thinking about this market? Flock Homes, Resi Club, they did a survey. It's about 250, maybe a little bit over 250 investors, 245 real estate investors who partook in the partook. I don't think that's a number, a name or a word. I don't think partook is a word. About 245 real estate investors took place in this survey. There you go. Who were those investors? Okay. Just so we can get a picture before we go through the data. 1 to 4 units, it's 55+%. Okay. So beginner investors make up the majority of this. You may be working with a beginner investor. You may want to, you may want to educate a beginner investor, somebody who has interest in investing. Well, this survey would be useful information. Over 1 out of 2 people surveyed in this particular survey were beginner. 1 to 4 units. You're a beginner. You're getting your feet wet. You're trying it out. You're seeing if you even like it. It's a tough business, especially 1 to 4 units. It's not easy. It's laborious. 5 to 19 units, 26.9. 20 to 99 units is 11.8%, and 100 plus units is only 5% of the investors here. So how do they feel about the market? This is good data. If you're working on any of these investors deals, and I just got I'm going to give a shout out here to Chris from BAMX. Okay. So Chris Q, he sent me a message, a DM on BAMX, and we talk about builder sentiment surveys. And I mean, this is the best. I'm sharing this because the single best idea for hyper local idea I've heard all year. I answer 100% of my DMs, by the way, on BAMX. So if you want to get a hold of me, Instagram DM, not a great place because there's so much crap and spam in there. Just hit me up on BAMX in the DM function there. I respond 100% of the time. Chris had this idea of doing his own local, his market 50. He's in Des Moines, Iowa. 50 to 60% of the inventory is new construction. He's like, I'm going to do my local builder sentiment survey. Like, how do the builders feel locally? Great relationship builder. Absolutely love that. Maybe you're in a high investor market. Maybe you're in a high Airbnb market, and doing one of these surveys locally and then comparing it to the macro. I love that. I think it's absolutely brilliant. It's the best idea I've heard all year for hyper local study, for email drips, for social content. I mean, the things you can do with that is brilliant. Shout out to Chris over there in Des Moines. But here's what investors are saying. Out of these 245, remember, half of them are beginner investors. How much U.S. real estate investors say insurance-related challenges have impacted rental property profitability? Okay. Everybody wants cash flow. Everybody wants appreciation. I want to get into rentals because, I want passive income. Well, how are you going to get passive income when the margins keep getting chewed up? Look at this. Rising premium costs. It's everybody has some kind of impact, except for 14% have no impact. It's everybody have some impact. Investors, 14% no impact. Major or moderate impact, it's over 50% of those surveyed. Reduced coverage options, you've got about 60%, 56% have an impact on reduced coverage. So we know insurance, we know taxes going up with price. These are things that investors have to consider if they're making an investment, if they're going to hold a property. How real estate investors say their rental property insurance costs have changed over the past 5 years. Look at this. The Northeast, only 12% has increased, greater than 50%. But you go west, you go southeast, those numbers are dramatically higher. Northeast, guess what? It's coming for you as well. But you haven't seen anybody decrease. Southwest, you've seen a small percent and a very much smaller percent, 1% maybe in the US. Nobody's decreasing. Insurance costs going up everywhere. How effective US real estate investors say different strategies have been for managing rising insurance costs. Selling properties in high insurance markets, not effective, not at all effective. Another one that stands out, shopping for new carriers annually, not at all effective, 40%. Okay, so how effective U.S. real estate investors say different strategies have been. So shopping for new carriers annually, not effective at all. That's the majority. Passing costs to tenants. Listen, you can only pass the cost off to tenants so much. All these costs that investors, and it's a supply and demand conversation. Eventually, that's why we've seen over the last year, rents have come down nationally. I know some areas have gone up. I'm just saying, nationally, they've come down. Jerome Powell, take a note. They've come down because it's a supply and demand thing. You can only pass on so much to consumers. What did Ivy Zellman say yesterday? Hey, more and more people just getting a roommate, living at home for longer with their parents. So you can't create demand where it doesn't exist. Eventually, on some of these deals, the numbers got to come down for it to make sense. How U.S. real estate investors rate the difficulty of key aspects of being a landlord. The beginner investors need to know this information. Okay. Now, for 38% say that the amount of time required for management, not difficult at all. Okay, well, 6 out of 10 say the amount of time is somewhat difficult or difficult. If you're not prepared for how much time it is to manage, and I bet you this 6 out of 10 is probably that 1 out of 4 units, like it's time intensive when you least want it. The emotional toll of tenant relationships, 66% say there is difficulty there, some level of difficulty. The impact of regulatory changes, it's 50-50, not difficult to somewhat difficult to higher than somewhat difficult. The true cost of property maintenance, look at this one. 90% have some difficulty. The true cost of property maintenance, the true cost of home ownership, the true cost of owning an investment built, the true cost of fixing things up. And fixing things up doesn't add value to the property. 1 to 3% of the value of the property should go back into it just on typical maintenance per year, depending on the property. The actual return, 66%, 66%, the actual returns compared to projected returns, they've got difficulty with that. These deals are tough right now to find monthly income that is real income on some of these lower units. It's really hard with where rates are. You got to play the appreciation game, which means you got to play the location game. Which area U.S. real estate investors say has been more challenging to manage over the real estate investing career? Property tax increases 14%, insurance cost 17%. Both have been equally challenging, 36%. So neither has been particularly challenging, 33%. Those got to be the real bros. Nothing's been challenging for me. How real estate investors say property tax increases have most affected their rental property strategy. So, reduced overall profitability without the ability to raise rents, 37%. Like, you don't always have these, like that to me, without the ability to raise rents, like you don't always have the ability to pass this off to the consumer. Okay. You don't always have the ability to do that. There's one other thing I want to show you. There's a bunch in here. We've uploaded all the charts into BAMX. So you can take a look at that. This is always an interesting one. This isn't the one, but I'll get to the other one in a second here. How real estate investors say their rental property returns compared to what they could have earned in the stock market. Look at this. 4 out of 10 in every market say far better than stock market returns. You talk to a real numbers guy that understands the stock. It always becomes a hard argument. I'm telling you, listen, these are easier investments. My argument is always, these are easier investments to get into. I mean, you can get a 4-unit bill and 3.5% down and, to buy. But when you're just talking the return game, listen, I think the ability to get into a bigger deal, a 4-unit deal, it's much easier to get into a bigger deal on real estate than it is in stocks. Stocks, you gotta have all the cash. And so here's things. This one's interesting. The thing real estate investors say they would change about being a landlord. Northeast, 40% said they would change tenant protections and eviction process. A lot going to the Northeast, not realizing what that's made up of. And people always ask me, why don't you buy properties in the market? Mark, the market in Connecticut. Why aren't you buying property? Well, that's one of them. I mean, I did it in 2004, 5, and 6. I made a ton of mistakes. Didn't realize the eviction processes in Connecticut. Lost my shirt. Got crushed during the mortgage crisis. Okay. To me, I like building businesses. I like building a real estate business. I like building BAM. I do like investing in stock. I'm not saying I don't like investing in real estate. If it's something I use, a property I use, or a property a business can use or something like that. But dealing with tenants, I don't find that a lot of fun. And I think a lot of early investors get in thinking this is going to be fun. It's almost like the agent who gets in because they watched Bravo. They get in to invest in because they saw something on YouTube that made it look really fun. And some of this data hasn't been presented to them. Okay. Some of this data and by saying it, they think if you're an agent, you're just chat GPTing words out. Oh, investing is hard. You got to deal with this. You got to deal with that. Like, that's why these charts are useful, because you actually show them some of the difficulties. They're just like, oh, you're just trying to get me to buy something else. I heard this YouTube video. I saw this YouTube video with my own eyes. All these charts available, by the way. Just go into the classroom on BAMX. Click on Hot Sheet right there, and all of today's charts, every day's charts, they're all available, so you can use it. So you can prove some of this stuff to somebody. We're going to get into the mortgage application here in just a second, but they're all available, so you can use it right at your fingertips. If you're not in BAMX yet, tonight at midnight, we're going to be talking about it today on BAMFest. Tonight at midnight, there's a price increase happening on BAMX, and it's a substantial one. It's $59 a month right now. It's $590 a year. It's like $2 a day. I think it's less than $2 a day, something like that. When you go $590 for the year, it's a crazy deal. That's going up to $970 for the year, $97 for the month. So if you're not a BAMX member, avoid the price increase. Do it now. Do it this afternoon. Just don't wait at midnight. That's going up on the price increase. So make sure you grab that, and you can do it month by month if you want, or you can do it annually. You get locked in on your rate, so you get grandfathered in. We got OG BAMX members grandfathered in, $1.60 a day. Okay, so brilliant math there by Haley. She went to UConn. She's smart. She's very smart. Brilliant math. All right, mortgage application. The math isn't looking good here. Mortgage applications decrease. We expected this. This isn't a shocker. This isn't the skies falling. We expected it as 30-year fix hit the highest level in 2 months. We expect this, and mortgage application on the headline decreased 12.7% from 1 week earlier. This is Mortgage Banker Association's application for the week ending April 18. The purchase index decreased 7% from 1 week earlier, so not as bad when you take refis out. That headline number has refis. Here's a number I like. We're 6% higher than the same week a year ago. Okay, we're still in a better future-looking spring market than we were a year ago. As we close out the spring, I know we're getting close to closing this thing out. Kentucky Derby's right around the corner. That to me feels like summer. I know some people wait till the end of May, or when summer officially starts in June. But we're closing this thing out. We're on the back nine now for sure. We are definitely on the back nine. And future looking, how's the spring market going to end? How's the summer market going to look? Future looking looks better than it did same point last year. Another positive read year over year. I'll take that. I'm looking at the positive reads here, and we've got some happening. And week over week, we expected the drop. Now, we have a 10-year. We're going to get into it here in a second. Maybe we get a little bit of a drop going into the weekend, and maybe next week looks better on the week over week. We're still battling the low points, one of the lowest points since 95, all of that, get it. But we're heading in the right direction despite where rates are. And I'll take that any day of the week. Mentioned earlier, here's what's going on with the market. Let's just take a look at right now. Dow's up 1,000 points. So market likes Trump softening stance on Powell, likes that China deal floated out by Treasury Chief Scott Bessent. Said yesterday, hey, like this China thing, it's going to be de-escalated in the very near future. Remember when they said, hey, we're going to have a deal in the very near future? Then 2 hours later, the stock market went through the roof and people were like, what the heck? The Trump administration is like telling people to go buy stocks. This is crazy. Is this another signal? Well, the market thinks it does. Dow's up 1,000 points. Nick Timmeros from Wall Street Journal says, no intention of firing Fed Chair Jay Powell. It'd be very difficult to do that. I don't think that Trump really can. And he's said in the past that he hasn't. He's just reiterating no intention. A lot of rhetoric, a lot of not nice words to Fed Chair Jay Powell for sure. Gets people thinking, oh, is he going to try to fire him? He did repeat his call for lower interest rates. And here's the quote. We think it's a perfect time to lower the rate, and we'd like to see our chairman be early or on time as opposed to late. I got to say, I agree with that quote. Like, I'd like to see the Fed not be late. They were late after they shoved that last 2.3 trillion down Congress's throat. Both sides of the aisle signed off on that. So, they had to get that thing passed. And Powell was like, this is your last time to spend free money. Like, he encouraged it. It was like, you know, it was like he was on the corner and this guy's like made the decision to go to rehab. And he's like, hey, before we give you a ride, do you want a last hit? I mean, that's what he did to Congress. And then he was late on increasing rates and we had that inflate. So I agree. Don't be late. It's really the only big mistake I've seen. I know there's other mistakes people pick apart with the Fed, but that was the biggest, like spending money we didn't have to spend for no reason. 10 years moving in the right direction today, a little bit on some of this news. You know, it's still high level that we've kind of seen here in the last 30 days or near the high level, but better than it was the last couple of days. 30-year fixes at the high level in considering all things in the last 2 months. Flat the last 2 days, 6.98. We'll look for that maybe to kind of drop down a little bit today. We'll be looking for that after, of course, now bamfest.com virtual event of the year happens. That's going to be in just now less than 2 hours, 12 noon Eastern. I'm jumping off now so we can get ready for that. Join us on BAMFest. Send this to a friend. Send nowbamfest.com to a friend. BAMX members, you have the replay as well. But send this to a friend so they don't miss it. Special guest is absolutely insane. Have an office party. Send this to somebody you care about in the industry you want to see succeed. We're kicking it off in less than 2 hours. I will see you guys all there, 12 Eastern, 9 a.m. Pacific. Now bamfest.com. Make sure you are signed up. Do not miss it. I'll see you guys there soon. Toodaloo.